So you're finally ready to enter the Forex world. You've learned what Forex is, why currencies even move in the first place, and you've started speaking fluent pip lingo. Great, but now you're standing at the edge of the battlefield, looking at those flashing charts and ticking numbers and wondering, how the heck do I actually place a trade? Here's the deal. You can't just knock on Wall Street's door and shout, "Hey, I'd like to buy Euro to USD today." That's not how this works. You need a middleman, a bridge, a bouncer who lets you into the trading club. And that, my friend, is the broker. Today, we're going to be unpacking what brokers actually do, how they make money, how to choose the right one, and finally, the moment you've been waiting for, how to place your first trade, step by step. So grab your metaphorical trading sword and let's get into it. Think of a broker as your personal gateway to the Forex market. Without them, you're just a person staring at the charts with no way to act. A broker is a platform that connects your desire to trade with the actual financial market. It's like wanting to stream a movie. You need Netflix or YouTube to actually press play. Your broker is the streaming service that delivers the action. Now, not all brokers are built the same. Some simply connect your trades directly to the market, kind of like a postman delivering your package exactly where it needs to go. These are often referred to as ECN or STP brokers. They don't get involved in your trade, they just pass it along. Others, known as market makers, actually create a simulated market on their own servers. They set the prices, they match orders internally, and sometimes they're the ones taking the other side of the trade. That doesn't necessarily mean it's shady, but you should understand that with market makers, your interests aren't always perfectly aligned with theirs. Still, whether your broker is a pure connector or a market creator, their job is to give you access, offer a stable platform, and this is the key, let you buy and sell currency pairs with as little friction as possible. So let's talk about the elephant in the room. Brokers aren't just doing this out of the goodness of their hearts. They're not your Forex fairy godmother. They're a business, and like any business, they need to make money. So how do they do it? Well, the most common way they do it is through something called the spread. That's the small difference between the price you can buy a currency and the price you can sell it. Kind of like the markup at a car dealership. You buy at the higher price, you sell at the lower one, and that little gap goes straight into the broker's back pocket. Some brokers also charge commissions, fixed fees, or opening and closing a trade. In some cases, especially with very low spreads, this can actually be more transparent than hidden costs inside the spread. Then there are swap fees, inactivity fees, deposit and withdrawal fees. Yeah, it gets a little bit like flying with a budget airline. The ticket might be cheap, but suddenly they're charging you for water luggage and using the bloody bathroom. The key is knowing how your broker earns, so you're not blindsided later on. Now, imagine you're choosing someone to look after your money, execute your trades, and give you a smooth experience every single day. That's your broker. It's not a choice to take lightly. Picking the wrong broker is like hiring a plumber to perform heart surgery. Just because someone has a toolkit doesn't mean they're qualified. You want a broker that's regulated, meaning a government agency or financial authority is keeping them in check. If you're in Europe, look for regulation under the FCA, CySEC, or BaFin. In the US, that's usually the NFA or CFTC. If a broker isn't regulated and they're promising you 1000x leverage and Lamborghini dreams, run fast. Next, you need to test their platform. Is it smooth? Does it crash when news hits? And are the prices real time? Or do they lag behind the market like a drunk tourist on Google Maps? You also want to look at customer support because when your money's on the line and something glitches, you don't want to be emailing a ghost or a bot. You want answers and fast. And finally, does the broker offer a demo account? If not, red flag. Because if they won't even let you test the waters before diving in with real cash, that says a lot. Alright, let's imagine you've picked a solid regulated broker, you've opened up your account, verified your identity, and deposited your first funds. Now, it's time. The moment you've been building towards, you're about to place your very first trade. You open the platform, maybe MetaTrader 4 or 5, cTrader, or the broker's own web platform, and the price is bouncing around like a kid on a trampoline. You see a button that says buy and the one that says sell. You pause. Your hand just starts sweating a little bit. And then you think, is this it? Is this the button that makes me a trader? Not quite. First, you need to choose your position size. How much of a currency pair you're buying or selling. This is where lot sizes come in. One standard lot equals 100,000 units of currency. Don't panic, you can trade micro lots and mini lots too. Most beginners start small and we recommend that. Next, you choose your stop loss and take profit levels. These are your safety nets. A stop loss says, get me out if this trade goes against me. A take profit says, close the trade once I've made enough. Without these, you're basically skydiving without a parachute. Then you hit buy or sell, depending on your prediction. If you think the price will rise, you buy. If you think it'll drop, you sell. And just like that, you're in a trade. Once your trade is open, the real fun begins. You'll watch the price move, sometimes in your favor, sometimes against you. Emotions kick in. That's fear, greed, excitement, regret. You'll check your phone too often, you'll refresh the platform like it's Instagram, and that's very normal. Every trader goes through this. But remember, it's not about winning one trade, it's about following your strategy. And to do that consistently, you need to trust your broker, understand your platform, and most importantly, know what the heck you're doing before you click that button. So there you have it. The broker's your bridge to the market, your trading enabler, and sometimes your greatest test of patience. Choosing the right one is half the battle. The other half, learning how to use the tools they provide and placing your trades with confidence, not confusion. In the next episode, we're going to be diving deep into trading platforms themselves. What's the difference between MT4, MT5, and those new kids on the block? What should you be using and why? Hit that subscribe button if you haven't already and give us a like if you've learned something new today. Keep your pips tight and your risk tighter. Catch you in the next one, traders.